It's been 1 year since the collapse of Silicon Valley Bank that sent shockwaves through the financial sector. Leslie Picker joins us now with more. I guess, do we have enough time now to say that it was kind of Silicon Valley's problem? I mean, it was more of a one-off than it wasn't it, Leslie?
Yeah, it's kind of remarkable, Joe. I think we could probably say that, although, of course, we're seeing cracks form once again a year later. But it's remarkable. A year ago tomorrow was when we saw those $42 billion in deposits disappear from Silicon Valley Bank in a day. That historic bank run ultimately led to the second largest bank failure in history, with the FDIC taking control the following day. So on this 1 year anniversary of SVB's demise, we're taking a look at what's happened within the banking industry since then. The turmoil has left a lasting mark on equity prices, with the KRE, that's a regional ETF, they're underperforming the larger bank-weighted KBE by nearly 14 percentage points over the last year. Larger banks were able to attract deposits from skittish customers, both consumer and commercial, who were worried about keeping their funds in a smaller, teetering bank. Deposits actually overall grew in 4Q for the first time in 7 quarters, and lower rates toward the end of the year helped pare back losses in underwater securities across the bank industry's balance sheets. That figure stood at $274 billion, down nearly $100 billion from peak paper losses in the third quarter of 2022. So the two issues that plagued last year's failures, interest rate risk amid a deposit flight, don't seem to be as much of a problem. However, credit quality does appear to be worsening. Quarterly provisions, the amount banks are setting aside for troubled loans, have been picking up steam, amounted to about double the average that they were between the financial crisis and the pandemic, about $25 billion. That is a key reason why net income declined across the system last year, and it's also been a concern within the books of New York Community Bancorp and a few other regionals in recent weeks. So I don't know if the story is over yet, but the history certainly isn't rhyming. It's not the same. It may be rhyming a little bit, Joe.
And it's just NYCB just cannot be even similar to SVB. It's just too small at this point, and it's not systemic, and the ripple effects, I would imagine, would be fairly small. Where are we down to now in just market cap? It barely registers, doesn't it, Leslie?
I believe it's about $2.5 billion. Yeah, after yesterday. And they still have about $117 billion in assets, making them a top 20 bank in the country by asset size.
Yeah, and deposits and everything else. But we could certainly handle that if we had to, I would think, either through peers and in the industry or the government. It's not that we want to get involved with that, but I've never understood. It has never seemed like it could turn into even an SVB, which didn't turn into much either.
Yeah, I think one of the key underlying factors here is that the economy has held up really well. And so you have, aspects related to the historic rise in interest rates that obviously have some banks offsides. But if the economy stays on this current path, in talking to bank executives, they say that most banks should hold up fine. Where you run into trouble is if we have high interest rates and a really significant recession. That's when you could see some more systemic issues in the system.